Inflation, the general increase in prices and fall in the purchasing value of money, is a phenomenon that affects both consumers and businesses. While consumers feel the pinch in their wallets, businesses face challenges in terms of rising costs, unpredictable demand, and potential decreases in profit margins. However, with the right strategies, businesses can not only survive but thrive during inflationary periods. Here's a comprehensive guide on how businesses can overcome the challenges posed by inflation. Understanding the causes of inflation. Before devising a strategy to combat inflation, it's crucial for businesses to understand its root causes. Inflation can arise from demand pull inflation, when demand for goods and services exceeds their supply. Cost push inflation, when the costs of production rise, leading to increased prices for consumers. Built-in inflation, often a result of a wage price spiral where workers demand higher wages, and if they get those wages, businesses then raise their prices to cover the higher wage costs. By identifying the type of inflation affecting the economy, businesses can tailor their strategies more effectively. Efficient cost management. One of the direct impacts of inflation is the rise in production costs. Businesses should optimize supply chains. By streamlining operations and negotiating with suppliers, businesses can achieve cost savings. Adopt technology. Automation and digital tools can lead to operational efficiencies, reducing manual labor and errors. Review expenses regularly. This ensures that unnecessary costs are identified and eliminated. Flexible pricing strategies. In an inflationary environment, static pricing can erode profit margins. Businesses should consider tiered pricing, offering products or services at different price points to cater to various customer segments. Dynamic pricing, adjusting prices based on demand, time, or other factors. Bundling, offering a group of products or services at a discounted rate. Diversification. Relying on a single product, service, or market can be risky during inflation. Diversification can be a buffer against inflationary pressures. Expand product or service lines. This can open up additional revenue streams. Enter new markets. Geographic diversification can help businesses tap into markets that are less affected by inflation. Focus on value addition. Instead of competing on price, businesses can focus on adding value. Improve product quality. Higher quality can justify higher prices. Offer exceptional customer service. A loyal customer base can be less price-sensitive. Invest in branding. A strong brand can command premium pricing. Hedge against inflation. Financial instruments, such as futures contracts, can be used to hedge against inflation. For instance, if a business expects the price of raw materials to rise, they can lock in current prices through futures contracts. Maintain strong supplier relationships. A good relationship with suppliers can lead to negotiated rates. Even during inflation, loyal customers might get favorable terms. Priority during shortages. Trusted businesses might get priority when there's a scarcity of raw materials. Invest in employee training. Well-trained employees can lead to operational efficiencies, reducing costs. Cross-training. Employees can handle multiple roles, reducing the need for hiring during inflationary periods. Skill development. Investing in employee skills can lead to innovation and process improvements. Cash flow management. Inflation can strain a business's cash flow. Monitor receivables. Ensure that customers pay on time. Negotiate terms with suppliers. Longer payment terms can ease cash flow. Maintain a cash reserve. This can be a buffer during tough times. Stay informed. Lastly, businesses should stay informed about economic trends. Regularly review economic forecasts. This can help businesses anticipate and prepare for inflation. Join industry associations. Sharing knowledge with peers can lead to collaborative solutions. Inflation, while challenging, is not insurmountable. With a proactive approach, businesses can navigate the inflationary maze and emerge stronger. The key lies in understanding the nature of inflation, being flexible, focusing on value addition, and always staying one step ahead through continuous learning and adaptation. Re-evaluate inventory management. Inflation often leads to higher costs for raw materials and finished goods. Efficient inventory management can help. Just-in-time inventory. This approach reduces storage costs and minimizes the risk of holding devaluing stock. Bulk purchasing. When feasible and if storage allows, buying in bulk during low inflation periods can lead to cost savings in the future. Leverage technology for forecasting. Advanced analytics and AI can help businesses predict market trends. Inflation is a complex economic challenge that requires multifaceted strategies to overcome. By staying informed, being proactive,